All right, good morning. Good morning, everybody. Good morning, everybody. Good morning, Adam. Good morning, Brad. Good morning, Matthew. Rebecca, good morning. Stephen, good morning. David, good morning. Futures Trader, good morning. All right, guys, so let's take a quick look here. What is the market doing right now? We are looking at a disconnected market between the 200 and the 100. We're testing harmony zone number two. Zone number two is support, and that's the zone between 640 and 630. And we're looking to see how the market will handle that. Right at this spot, the market put a double captain setup. So that's a support, and they violated that support. So if we continue to trade under those level and not break above 65 and a quarter, we're gonna get potentially a 615 close and a reversion to the mean into Globex and 565. So it's very important for the market right now to start experiencing an upward momentum. Otherwise, the longs are going to be behind big time. So we're going to ask a few questions here. Who's winning this battle? What type of trader is operating here? How are they treating the stops? That's a that's a good thing that we just saw here. Okay, that's a good thing to see. The market is still disconnected, but at least the market is bouncing between harmony zone number one and two, and the market is trying to put in a bid in a higher low. Ultimately, we need to see a break above 670, and we need to see an actual close at 78. 78 will get the market to be in sync on the long side on a swing trade perspective. The swing trade target is 715, but we have to absolutely protect 630. So that's important. Part of that first half an hour is us understanding the stops, understanding the participants, and trying to figure out what kind of market we're having today. DJ Mike, good morning. Steven, Big Money Steven, good morning. Adam, good morning. Good morning, Ethan. You know you're on a beach somewhere. I'm on an iPad on. See, that's why I wore my My beach attire. Yeah, you gotta share with us some of these pictures, man. Enjoy it. So let's make some money here. We got a market so far that is consolidated. Part of me understanding that it is consolidated is the fact that the 200 and the 100 are out of sync, and the market is literally oscillating between harmony zone number 1 and 2. As long as that's the case, we have a consolidated market. The type of trader that will be successful in this type of environment is the one that fades against a stop run, meaning that when the market comes back down, hits the lows or the most recent low and sell off then reverse, then that is a buy signal from harmony zone number 2 into harmony zone number 1. And and we're seeing a lot of that happening. Like this was the first. Let me see here. So we had a first touch right here, right? Well, we had multiple touches here. 1, 2, 3 to the tick. 4, 5. Boom, market runs up. So you see that? So the market has been in that type of consolidation for quite some time. And eventually it's gonna try to rebalance itself. And it looks like it's gonna rebalance itself to the upside. And if we get to that 678, then the market's gonna be in sync on the long side. Now we have this double captain setup that I pointed on. And then also they put on another captain setup long. Rebecca, I'm sending you a message right now. So we're seeing the market fade whenever we get to harmony zone number 1, and they're getting bought once we get to harmony zone number 2. And we counted at least 5 times that the market did this. So eventually this has to kind of resolve itself one way or another. If we resolve itself above 678, then the swing trade target of 715 is going to be active again, and we can start looking for that big target with entries. Now look at that. Here we go again. There's a 70 NT wrinkle captain set up at 661. So that 61 trading above it is very important again. And if we end up closing above 69, that will be the trigger that will get us all the way up to the 78. So 61, 69, 78. And we have to protect the 630. That is the important level. So the trader that's operating here and successful is the one that is fading these sell-offs and fading the rallies. And he is scalping, not looking for momentum. There's no momentum anyway. Here we go. Okay, so that's a decision the market is making to retest harmony zone number 2 for the 6th time. 6th or the 7th time. That's trouble. All right, so that's what they wanted to do. So the market closed, and we have the market. The market is in sync on the short side, and we have Globex as a target, which is 590. Also, we have a swing trade target of 590. So basically, Globex and the swing trade target is the same. Okay. And we should start picking up some momentum on the downside. Rallies are shortable on a swing trade basis, and we have harmony zone number 1 and 2 to guide us as resistance areas. And harmony zone number 1 is 640 by 650 and 665 by 675. We're looking for rallies to short into this market. We do have a channel on the downside that we're operating within. This next target is 590. If we're looking at ES, where's ES here? Let's see. Where's Sheila? All right, ES closed that candle, and we have a trend target of 353.64 quarter, and we're looking for that target, and it happens to be Globex as well, 53.64 and a quarter. And if that market hits there, most likely NQ is going to get to Globex as well. And then we may end up getting something like this, where the market has like 3-4 candles in a row and potentially get to 353.55 and lower, and see what kind of market we have there. And here comes 590 Globex. And we should be expecting a bounce soon. See that's like a first touch basis on Globex at 590. So it's natural for us to see a bounce back, right? In and out. Yep. Good job, DJ. I'm trying to understand your question, Matthew. How do I get my charts to follow the price? Here we go. Wow. Target is hit. I mean, obviously we hit the target on the Globex target. So now we have another target. It is 540. And we're getting momentum. Rallies are shortable. Next target is 540. I mean, we should expect a bit of back and fill, trying to retest Harmony Zone number one and Globex. So I mean, they had a nice first touch reaction to testing Harmony Globex, and then the market sold off in a forceful way, and they'll typically consolidate here between target number four and that level of Globex. So just gonna be careful trying to get short here. The market has a tendency of bouncing. Okay, and on when you're look at NQ, I mean ES, you see the market just put a captain setup at 53.60 and a half, and sold off under it. Just be careful here. That's all I'm saying. 540 is our target. Target 540. We're about to hit that target now. Boom. Target is hit. And it happens to be the bottom end of the Globex band. So again, that's an area where they can come in and try to bounce it back up. And they bounce it back one time, and they're trying to break it. But here, most likely, they're going to go back up a little bit here. The market is in sync on the short side. We're looking for rallies as a shorting opportunity. We have a target of 515. 515. There you go. Yeah, see that zone, the Globex band zone. First touch, second touch, you're gonna get some reaction, and now we're getting an oversized reaction. So the market is out of sync right now. The 200 and the 100 are out of sync. So you're gonna get a fight between the longs and the shorts, and scalping is the mode we need to be looking at. Most likely we're gonna get to Globex again at 590 and retest harmony zone number 2. Here it comes. 515 target is taking a pause. See the earlier behavior that we had where we had price going between harmony zone number 1 and 2, and they're just basically going back and forth till we broke down. So we're getting similar behavior here where we're going to harmony zone number 2, coming back to 1, we'll go back to 2, and they just do that for a while. For the shorts to get back in sync, we need to trade under 53 and under harmony zone number 1. Here, Rufio, good morning. Yeah, Ethan, short those rallies, all right? Right now it's a two-sided market, so the swing trade portion of this move is taking a pause, and it's a function of scalping here. Look at location as well. We are in the middle of the range on the 200 NT Rinko, which adds to this noise rotation that you're going to see or seeing. So the question is, how are they treating the stop? Who's operating here? And which hand is stronger, the short or the long? Right now, there's a back and fill behavior. They're buying the stop runs. So right here, look what they've done. They took it from 72 to 82 to 92. We got to Globex and got faded. But they bought the stops here, the stop run, and sold it up there. So it's just a two-sided market. So now if they, here we go again, they're coming back to that 53 level that they need to protect. And if they buy it and never look back, then that tells you something. Here we go, no. So they're selling that. So now they're gonna most likely buy it back up a little bit. So the shorts are still the dominant force so far. Okay. And I'm looking for rallies as a shorting opportunity. And what would make me change my mind? Like when would this shift to where I need to buy the dips? First, the market has to get back out of sync. And that's the first thing. You got to break 586. And ultimately, you got to trade above Globex of 590. And if that starts to happen and you make higher lows, then that will give us an environment that is shifting to the long. It's not long yet, but at least it's shifting. Right now, rallies are shortable all day, till proven otherwise. We broke the 53, and that 53 was a critical level. We got 3 minutes to the top of the hour. We don't have any news coming up today. Hey, good morning, Brad. I don't know if I said good morning to you or not. Just think saw your name. $61. Let's see if they get to 61. Here comes to 61. And here they should be pulling back down. Okay? That's consistent. That's consistent. Okay, so that's good. That's good. See that? So what they just did is just they ran the stops one more time here from 51. So look at the most recent swing high and measure 10 to 15 points from it, and that's typically where they will run the stop run and reverse. So in this case, you ran into harmony zone number one, and you ran into that 10-point run up against that stop run above 51. So 61 is where they would go, and there you would look for a reversal, and boom, you got that. So that's where that logic comes from. Rallies are shortable on a swing trade basis. We do have a target of 515. If we break anything above 65, the market is going to be out of sync. And it's going to be a two-sided market at that point. 65, we got very close. And that makes it a two-sided market again. So they're spending a lot of time in the middle of the range trying to digest this move. And we're too close to Globex not to retest it again. So, and we're at the bottom end of this Globex band. You see this purple area right there? So we've seen how they came up to it that one time and rallied to Globex. Okay? Then this is the second time they get to it. Yeah, they sold off a little bit under, but ultimately, they're bouncing right back up. Okay? So that type of behavior is consistent with a consolidated market, is not consistent with a trending market. So I need to be very, and location wise, where we're so close to Globex, that tells me that the market has bids in it that could run us back up into Globex, which means that they're constantly setting up traps for the shorts here. So any short that you take needs to be on a stop run into those 10 to 15 point targets, see a reversal, take it, and take it on a scalping basis only. And keep your stops very tight. This is a scalping market right now. It goes from wanting to trend to scalping. And the key is how the 100 NT Rinko is getting really treated. Hey, G Money, good morning. Good morning. So right now we're in the middle of a 20 NT Rinko channel, and that channel is coming up to resistance of harmony zone number one and getting faded. That's okay. You didn't miss that much. The market was just waiting on you to show up. See that? And that was my suspicion, because you could see the early signs of that the market is not as forceful at these levels, and we're in the middle of the range on the 200 into Rinko. Oh, thank you, Ethan. That's gonna be funny. You see that? I mean, that's just trickery in the market. But the good part is we felt it, we saw it, we saw the technical aspect of how the market was behaving, the fact that the market got disconnected and stopped making higher lows. It was hitting resistance, but they made a captain setup long right here, and boom, right into Globex. All right, so what do I make out of this? What do I make out of this? We're reading the market. What type of trader is operating here? We talked about the faders and the two-sided market type of trader is operating. Now you trapped a bunch of shorts down here at those lower levels, and you're running them over. So that's the source of energy that the market is consuming. So pullbacks are viable on a swing trade basis. The 200 and the 100 is in sync on the long side. We're gonna look for a big target at 640, and we will reevaluate that long if we break anything under 580. So if we pull back to the 90s, I mean, obviously we just broke out at 600, so the market will tend to kind of retest that. But pullbacks are viable on a swing trade basis, market trapped shorts, and using them as fuel for this next move. And the next move is going to be 640. I'm trying to pull up your picture that you sent me, Ethan. It's not pulling up, but I'll wait for it. Oh, here we go. Let me see. Photo. Look at that. You can pick a better picture than that. I looked like I was cross-eyed. So I'm in the Bahamas, guys, on a iPad from Ethan. Beautiful view, man. Enjoy it. So that target we talked about, 640, boom. I mean, that they were using the shorts down here as a fuel, and you see that typical behavior when you're trading. We're trading between basically the bottom end of the Globex band to the top end of the Globex band. I mean, that's just basically what the market is doing right here. Target of 640 got hit. Next target is 665. Pullbacks are viable. That is a stop run, and they are not. They're relenting. They're not relenting at all. Right across the board, Adam, I haven't heard from you. Brad, DJ, where were you at? G Money, you just showed up. Marty, how is Marty doing? Matthew, Rebecca, and Steven. Steven is up. DJ is up 500. Marty up 3 grand. Good for you, buddy. Rebecca's learning, and give Rebecca a warm welcome. She is part of the family, and she will be with us going forward. Yep, 66 or 4 grand. 64 grand? What are you talking about? Target is 665. 665. And boom, 665 coming up. Coming up. Oh, they trapped you, bud. Oh, I'm sorry to hear that. It's location. Look at the 200 NT Rinko. So, I mean, the read of it is location. So, first location was the fact that we're under, like literally the bottom end of the Globex band. Then the market puts a captain setup long right here. So they run it up. They make higher lows and they give you a channel to the upside. That's clue number two. The next clue is we hit harmony zone number one, which is resistance. They react to it on first touch basis, but then you get a captain setup long. So the market gave us like 3, 4 clues that things are shifting, and the assumption of a continuation of the short pressure is not there, and the market got out of sync already at that 62, 65. So that painted the picture clear that the market is not, that it was done. It was trapping. It was trapping the shorts. And they used the shorts as fuel for that run. So The key to it, Adam, is just take every experience and ask yourself a question: who's the participant? Who's winning here and why? What type of trader is operating in this range? Um, and constantly asking that type of questions will clarify what type of market you're dealing with. Because it doesn't help me any to say, oh well, the market turned here. Now we're at highs, and I'm already trying to short the market. It just I gotta see it as it's building. All right. I'm gonna look for an entry long. Oh, that's not what I want to do. Here we go. 660, and let's see if we can get a push. And I'm out of that one on a scalping basis, 658 to 65. I'll take that. I mean, it's good for 15 points, to be honest with you, but we are a bit extended. I'll take that scalp. We have a target, and the target is 690. Look at that, too. Second wave. We have a what you call it, a harmony wave building up right here. Our target is 690. We'll reevaluate the longs if we really break under 625. But if we break 640, the market would be out of sync at that point. Okay? But the 625 is important to keep. And obviously, Globex at 590 is critical. Us trading above Globex is bullish by nature and gives the market a long tone. From the bigger picture. And I wouldn't be surprised if we break out above 700 and then come back in. Target is hit. Next target is 715. Pullbacks are buyable on a swing trade basis, and we're looking for that 715 target. So, they sprung the trap. They got it to the middle of the range, consolidated, showed a captain setup and a higher low in and around the 540. Market broke the 562, which is actually it was 66. Basically, they got out of sync and never looked back. Just trapped everybody and boom. Now did we say the 700? We got to the 700, right? Now, right here is it's a good spot to really fade this thing. I'll take a shot at it. It's probably a little bit too risky, but we'll see. Yeah. I knew that was a little bit too risky. What happened there? Where's my stops? That's interesting. Here we go. Flatted one contract, and I'll try to get paid on the second one. Just gonna get out of this one. All right. Target is hit. Pullbacks are buyable on a swing trade basis. And we have a target of 740. All right, so let's take a look at how they're handling the stops. So if they start breaking anything under 97, which is the 700, are they gonna pick it up? That would be the test. Right now, all those pullbacks are buyable. We have a big target of actually, yeah, 740. Okay, that's the stop run. They're taking out the stops. Gonna jump in here. And let's see if we can get above 700, maybe 705. So I took one of them off. And let's see if I can get to the 705, 710. I'll take this one out. So we got long here, long again added to it and sold off at around the 700. It was just pausing too much. And I need to make sure I have my, here we go. So that was a winner. See that? Okay, so they keep trying to defend Harmony Zone number one, which is support. That support is 690 by 680, and then 665 by 655 is zone number two. And we have a disconnected market right now. The market is out of harmony, and it's the two-sided market where scalping is the better approach. Pullbacks are viable, rather be long than short, but we have to reevaluate the market if we break anything under 670. Yeah, when the market is in harmony, meaning the 200 and the 100 are in sync, I'm looking for those big targets, and the current one that we are going toward is 740. But the market now has to go all the way back up to the high to really reactivate that target. Because when the market goes out of sync, then it's just the market is digesting the prior move, and at that point, the market is no longer trending. It's in a scalping mode. It's in a scalping mode, and it has high potential of reversal patterns against that trend. But when it gets back in harmony, then the bigger target is a possibility. So let's take a look. I mean, this is a perfect example, G Money, how the market at 66 reversed, right? So the market automatically became out of sync. The market was short at that time. Then we ran up to 614. So the minute we got to 614, the market became in sync and didn't get out of sync till now. From 614 all the way, it went up to 730, then came back down and got out of sync. So between the 614 all the way up to that 730, you're getting one good target on a swing trade basis after the other, and the market never stopped. It just kept doing it over and over and over. And that is the type of momentum that will get you bigger targets. But when the market gets out of sync, the personality shifts. So you have to shift with it as a trader, and you have to definitely consider it as more than one possibility, more than just a trending market. It's no longer a trending market, but consolidation, fading, sideways, trapping, reversal. All those possibilities become fairly realistic. We're going to 740. Now the market is back in sync on the long side on a swing trade basis. I mean, that's one of the reasons why I went long here. Is a retest of harmony zone number one, and hopefully a potential for the market to do what it just did. I just didn't stick around for too long. And I did the same thing right here. And I got in like literally right at the pivot reversal of 58 into the 65. I got cute a little bit here looking for the fade, but nonetheless took a stop and moved on to another winner. So here we go. We are looking for 740. And we're about to hit it. Does that make sense? They put a captain's. Okay, so that is important. That is really important. They put a captain setup short, right, like literally to the tick on that 740. Like if they want one or two ticks above that, it would have been closed. So the market just faded it with a captain setup, and that is critical because whenever they put an actual signal right at a target, a major target, and they reverse it, you almost have to see what they do next here. If they make a lower high, then the expectation is against that stop level of 40, you may get a fade into the market that is going to get you to 690. And if you test 690 well for the shorts, then you may get back down to harmony zone number two to retest that, then a complete reversal at 640. So you're getting that type of behavior from the market. Hmm. Well, that long captain setup, G Money, worked. You got actually both of them worked. The captain set up short right here at 7:30 into captain set up long to target number two, and the market is just pulling back right now. But both ends of that little game worked. Joseph, the answer to your question is yes. You have to trade under evaluation for 10 days. So 1606 and N. I gotta get in here and add to it. And let's see if I can. Ooh, but nasty, 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 nasty. They trapped me. Here we go. I'll take it here. So long and long. And I mean, I say they trapped me. They didn't really trap me. You know, they just pulled back a little bit, and I took it off in the middle of the range. So that was a profitable trade. It's two things. It's testing harmony zone number 1, and it's a stop run under harmony under this captain setup. And if you look at the price from 16 to 06 and then bounce. So that is the typical behavior for their stop runs, is they tend to do that. So now where's my target? Is literally the middle of the range. Now I don't like the fact that the cloud shifted, but that's just the nature of that behavior here. So this is where we at for the day. We are at 335 after commission. We had a first winner, then we had, I think, a 2. That's the short that I got cute with, but we managed it for a small stop. Then we just hit a couple of good ones, including this last one that you just saw. So 335 so far. And moving on to the next decision. What is this? Here you go. 25.35. That's yo, yeah. Ethan, you see that 10-point deal? Yeah. All right. So let's talk about this type of market here. You know, what are they doing? So the beauty is they're taking the stops and they're buying them. Okay, I get it. And also they're not they're not taking the big swing highs yet. They're taking the small minor moves and running the stops and selling them. So that is like minor stop run versus a major stop run. Okay? But that's still a behavior that they're doing. And they're trying to basically they're consolidating, they're rotating, they're building stops on both sides, and so far the market favors the longs. And they're taking it into harmony zone number 1, which is support, and that's the initial first line of defense for these longs between 715 and to 705, and the market is protecting that. So that is information. It's telling me the longs are here and they're defending and they're acting in an orderly manner that supports higher prices, including a target all the way up to 765. The market is in sync in that direction. So where would that picture shift to more consolidated two-sided market? If this market breaks down that low and breaks down 703. So if we break 703, you're going to get a two-sided market where the shorts are active. But as long as the market keep doing this, we're going to be doing two things. One of them, continue to look for that bigger target of 765. And now I'm also looking for an entry point consistent with a trend following behavior. So that's also a minor stop run that they just did. So, okay, so they took the stops from here, bottom up, took the minor stops above it, sold it, and they're trading in the middle of the range. The market still favors the longs in this behavior. And you have those two spots, the 703 and the 705. That whole area needs to be protected. Next target is 65. I mean, it's heading toward that right now. You're forcing something that is not happening, Adam. You're trying to force stuff that's not literally happening. The market has been favoring the longs through that process, through the idea of the minor stop runs are getting taken up by the longs, and we keep hitting harmony zone number one multiple times and supporting that level. And we had a big swing trade target of 65. So there's no reason for me to kind of think like where at what point would I say, hey, listen, at least I have a shot at a scalp short is breaking 702, and then the market will be out of sync, then the possibility of a complete reversal happens. But that doesn't mean the shorts are the better approach. It may be just the entry and how it you got in needed adjustment. So we are all working on our market read. It's a science and an art, and it's not necessarily, you know, somebody will get that read 100% of the time every single day, and we're constantly trying to improve that part of it. But what helps me at least is making it a rule, kind of somewhat of a rule based, like, I have the 200, I have the 100, both of them are in sync. I should look in that direction. If the market gets out of sync, I have possibility of reversals that I can take advantage of, and just make it as rule based as possible. So this way, you will fall in traps a lot less often, and that's a win by itself. So now we hit our target, right? Next target is 790. Pullbacks are viable on a swing trade basis, and we have harmony zone number one as a support. That's 740 by 730, and harmony zone number two is 715 by 705. We'll reevaluate the longs if we break anything under 720. If we also break under 728, that will disconnect the market and gets us in a two-sided market. Right now, pullbacks are viable. What's wrong with my mic? You guys hear me or no? Some people saying mic check. Okay, so you guys are hearing me? Okay. Hi, you said where else I'm streaming? Twitter, Facebook, YouTube, Twitch, and I'm gonna add a couple more, TikTok and Instagram. Those are the two that's coming up. Not there yet, but we'll be there. Yeah, they faded it. They faded it and also did that one. But here we go. Harmony zone number one, it's there. And they're trying to hold on to that level. So they took out the stops. Let's see here. Where 45, 35. Yes, he took it 10 points and reversed. I gotta see more of this price action, but ultimately, till proven otherwise. And we do know how the market would look like when the market start to shift. Okay? But as long as the market keeps doing what it's doing right now, we're looking for pullbacks as a buying opportunity. You start dipping under that 720, you test harmony zone number 2, and then you start making lower highs, then that is a sign that this market is shifting. And I don't necessarily need to catch it here. I just need the actual market to show me that is shifting. And then that will put me on hold from going long. And then I'll start looking for confirmation of that shift in direction. And then we'll start reacting to it in that way. I'm going to take one step. I'm going to go get some water. And I will be back. What happened? What happened? This market just decided to dump? Boom. So we got that going on, then we have this, and all of a sudden just poof. Poof, the magic dragon. So wow, that has to be news specific, guys. Has to be news specific. Market doesn't do that quickly unless there's something just hit the wire. Yeah, that's what I'm trying to figure out, David. That's what I'm trying to figure out. If there's something in the Middle East that just triggered all this stuff here. Yeah, and that's something, Adam. Took it an hour to get up there, 3 minutes to get crushed. So okay, well, what's next? That's what's important. What's next? And what's next is okay. The market is in sync, but we hit glowbacks and they're fading. Oh, jeez. Wow. Wow. Here we go again to crazy action, right? Big swings. Yeah, look at this. Oof. Okay, so how do we handle this? Market is out of sync. We're hitting harmony zone number one. The market rallied up right above that area and came back in. So what is that? 1121 and came back in. Yeah, so we're back to the scene of the crime, basically. I mean, if they're gonna run the stops again, they were gonna have to go above 33 to 43 or 47, and then fade the market back in. Uh, Here we go. Okay. I'm gonna try to flush it here. You have a 600, which is a whole number. 98, 88. Wow. All right, so let's take a look here. So this is what would a trap look like. You're seeing this captain setup short that the market just put on the 70 NT Rinko. That's a big one. And they typically don't do it here. The market will run up and then they put that formation. So the market ran down and put that formation. So any price above 683, they're going to be trapping all these shorts that stuck around. And I wouldn't put it past them. Okay? Now, a confirmation candle would be this candle closing lower. Then we could maybe play that game. But I'm very leery of trying to get short here. See, that's well, here we go. Back to that. We were just talking about it. See that kind of behavior? I'm leery of it. That's, I mean, unless you get a break with a one candle confirmation. I mean, if they want to break 98.50, then that'll be a 6 pound captain set up short. I'll play that game. Yeah, I'll play that game. The market is out of sync. It's two-sided. It favors the shorts. We're hitting harmony zone number one multiple times and fading. You break the 600, the shorts will be back in play on a swing trade basis. Then you got to clear glowbacks and then head toward 565. We'll reevaluate the shorts if we start breaking anything above 40, 640. And I'm very, basically I'm watching this very carefully because this type of pattern after a market drop tends to trap the shorts and run back up. So that's in the back of my head right now. Okay, if they want to prove me wrong, they can prove me wrong at below 600 and then break down and close under that. That will be a 6 pound captain set up with a confirmation, and I'll play the scalp, scalp to a swing trade move, into a target below 70, 570, all the way down to 565. But they got to prove that. Yeah, take care, Ethan. Captain set up short on the 50 NT Rinko, so that's an added advantage to the shorts at 608 half. They just put that on. Yeah. That's just nasty stuff going on here. I mean, they're just trading in and around Harmony Zone number one and Globex. So they're churning people, and it favors the shorts till we break 640. Anything. So this is a great spot for me to do absolutely nothing. This is a chop zone. The best we can do is trade the stop run edges and fade with small stop and small size, or just pass on it and wait for a couple of things. One of them is a break under the 600 or a break above 640. Anything in between is exhibiting this tight range of consolidation. The market is out of sync anyway, and you're getting this type of behavior. So we can profit from it. It just you're scalping 5-10 points by looking at the stop runs and just going against it. All right. So this market is going to go to 40. Okay? This market is going to go to 40, 45. Against that 605, 610. Ten. All right. So what we're seeing here is that Captain set up short, failed, and now they put a switch trade and retested the 15, not closing under that 7. So that is bullish in nature. And the odds of 40 to 50 is high against a close under 10. And we should see it starting to gear up here shortly. And here it comes. Boom. When you see it, you see it. It just, that was all part of that initial suspicion of them really trapping people here. Just all was part of the whole thing, because that signal does not happen here as often. Like if you run it 100 times, run that exact same signal 100 times, it doesn't happen in that spot, and it work maybe 10% of the time. So if that's the case, then there's 90% of the chance that this is nothing but a trap. Then start looking for how the trap would look like. And I feel like we saw that one coming. Wow. Wow, wow. That was a good one. Marty, am I assuming that you went long? Yeah. Yeah. Man, as long as you pick up a piece, that's all that matters. But those big moves, you have to be able to, well, one of them is to be in more than one contract, take a profit, go break even, put a big target, and walk away. That's the only way. If you keep looking at it, you're your scalping mentality will try to micromanage it. But in order for us to hold on to any big trade, literally, you have to be in more than one contract. Take a small piece, so this way, no matter what happened, you already made your money, and literally put a big target that makes sense, and walk away from your screen. Come back in 10 minutes. Come back in 20 minutes. Either you got stopped out for break even, or you hit that big target. Like right up here, we're very close to the new target of 690. So bigger picture stuff. Yeah, you're up 3 grand. That's right. Yeah, that was good. So you see the market doing railroad longs. So that's one of them, 617. And this is revisiting the scene of the crime, basically. And you're looking at the 66 and a run up toward 715 right now. Matthew, that's the 200 NT Rinko or Ninja Rinko 200, and that's the bigger picture in price action. That's the big swing trade chart. It's 210. I mean 200, 100. So when you're putting it in your screen, it's 200, 100. 87, 97. All right, let's see what they do here. Now you're running into a whole number 700. Target is hit 715, is the next target. 87, 97. We're hitting target number 4 in this sequence, 710, and also about to hit the 15. 15 coming up. Target is hit. Next target, 740. Harmony zone number 1 shifted to zone number 1, which is 690 by 680, and then 665 by 655. Pullbacks are buyable on a swing trade basis, and we're looking for that 740. Don't get in front of a freight train. I'll run you over. It's long. Long and strong. All of that started with the way they handled this structure. The captain set up the deception, the consolidation, and then they took it out and took they sucked more of the shorts in and got out more of the longs, and then boom. It was beautiful. It's really, really smart, really smart market. It's a Monday, right? I'm always on a Monday, looking behind me, seeing who's trying to stab me. And typically, Adam, on a Monday, we've seen it so many times, man. I am the trader. I'm a little bit kind of like rusty because, you just had 2 days, a weekend, and you're coming to the market and I almost have to relearn and re-see the market live again and get accustomed to it. So that first hour on a Monday, the best thing I can do is really pay attention to the market and just read it. And even a better approach, read it, make 5 assumptions, see how well you do. If you're doing well, go sim and trade for half an hour on sim and make sure you're profitable. If you do those 2 steps, then you go onto live trading and trade your own account or one PA or one eval, see how you do, then start scaling up in your frequency and in number of accounts that you're trading. So this way you're not caught cold trading a market on a Monday that you're not quite understanding yet. Does that make sense? I find that to be very, very helpful for me. Keeps me from running cold into a market that is just emotional. Okay, so they put on a captain setup. G money. You see that? Captain setup. Short. Okay. They put a captain setup long here, pulled it back, then ran it back up. Captain setup long right here for a move. Captain setup short for one candle. Then captain setup short for multiple here. That's a tricky one. Um, Rebecca, I'm sending you a private message. Testing harmony zone number 1. And we are out of sync with this market. Market's out of sync. Hmm. 95, 85 pulls back. Yeah, that was an entry. All right, guys. So this is how I'm ending my morning session. 3:35. We took longs, we took shorts, and more longs. That seems to be working. It's good for a Monday, and we will see you bright and early tomorrow. We will do this again. So before I go, how is everybody doing across the board? I know Marty did well. Matthew, you're up money. Becca is watching and learning. Steven, where you at, Steven? Big money, Steven. Adam. Adam got punched a couple times. G Money. David, Ethan. Ethan is gone. High and Bounce. Christian. Here we go. Adam is back. Doesn't take long, that's for sure. Ooh, that's no good. I hate when that happens, G Money. All right, guys, so I'm out of here, and we will see you bright and early tomorrow. Also have IP. Yeah, I mean, I actually like Sierra. I've tried Sierra multiple times. I mean, I still have it. I use it as a backup. All right, guys, have a good one.